Good morning, and welcome to the Loma Negra third quarter 2025 conference call and webcast. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. Also, Mr. Sergio Feisman will be responding in Spanish immediately following an English translation. To ask a question, you may press star, then 1 on your telephone keypad. To withdraw your question, please press star, then 2. Please note that this event is being recorded. I would now like to turn the conference over to Mr. Diego Jalon, Head of IR. Please, Diego, go ahead.
Thank you. Good morning and welcome to Loma Negra's earnings conference call. By now, everyone should have access to our earnings press release and the presentation for today's call, both of which were distributed yesterday after market close. Joining me on the call this morning will be Sergio Feisman, our CEO and Vice President of the Board of Directors, and our CFO, Marcos Gradin. Both of them will be available for the Q&A session. Before we proceed, I would like to make the following safe harbor statements. Today's call will contain forward-looking statements, and I refer you to the forward-looking statements section of our earnings release and recent filing with the SEC. We assume no obligation to update or revise any forward-looking statements to reflect new or changed events or circumstances. This conference call will also include discussion on non-GAAP financial measures. The full reconciliation of the corresponding financial measures is included in the earnings press release. Now, I would like to turn the call over to Sergio.
Hello everyone, and thank you for joining us this morning. I would like to start my presentation by discussing the highlights of the quarter. Then, Marcos will take you through our market review and financial result. Following that, I will share some final remarks before opening the call to your questions. Starting to slide 2. During the third quarter, industry activity lost momentum as the broader economy slowed. The electoral process and uncertainty around the sustainability of the economic framework, combined with higher interest rates in pesos, ended up negatively affecting shipment levels for both the industry and for Loma, which declined 5% year-over-year. That side, volume recorded in September and October provide encouraging signs as we look ahead. In terms of results, in this more challenging context, our consolidated adjustment EBITDA margin contracted to 20.8% in the quarter. However, it remained almost stable versus the previous quarter, despite a higher cost pressure than the typical oaks in the third quarter. Please bear in mind that energy costs are seasonally affected by the winter period. Adjustment EBITDA reached $36 million, reflecting an 23.7% reduction with million in pesos. On the balance sheet side, net debt declined by $9 million quarter over quarter to $206 million. In addition, following the Class 5 bond issuance, we significantly improved our maturity profile, and our leverage metric remained at a comfortable level for the company. I will now hand off the call to Marcos Gradin, who will walk you through our market review and financial result. Please, Marcos, go ahead.
Thank you, Sergio. Good morning, everyone. Please turn to slide 4. After a solid first half of the year, forecasts for the third quarter point to a weaker performance of the Argentine economy, and full-year growth expectations were revised down to around 3.9%. This dynamic is fully reflected in construction and the cement industry. The recovery trend began to lose some steam, mainly due to uncertainty around the election process and questions about the sustainability of the economic program. After 2 quarters of growth, cement dispatches fell around 1% in the quarter, largely explained by a soft July. And although September volumes were the highest in 22 months, they weren't enough to offset the quarterly decline. Bag cement remained the most impact format, as it is more tied to retail and residential demand. On the other hand, bag dispatches continue to perform well, in line with what we saw in the second quarter, and reached 44% of total industry dispatches. Looking at the most recent data, October's volume showed renewed strength, with a 7.4% year-over-year increase, and year-to-date volumes are also up 7.4%. Now, with the election behind us, we expect uncertainty to start easing. The outcome of the election could be seen as a validation of the government's policy direction, which may help unlock investment projects that have been waiting for a more stable framework. So, overall, we remain optimistic that this renewed confidence will gradually put the industry recovery back on track. Turning to slide 5 for a review of our top-line performance by segment. Second quarter top line declined by 12.1%, primarily due to weaker performance in the cement segment, followed by softer results across the remaining segments. Revenue in the cement, measured in cement and lime segment, declined 13.2% year-over-year, driven by a 5.4% contraction in volumes and softer pricing year-over-year. As we mentioned this quarter, we saw a halt in the recovery trend that had started in the first half. Bulk cement dispatches continue to be the dispatch mode, showing the best dynamics, supported by industrial and commercial projects and by larger housing developments. In addition, provincial-level public works began to gain momentum, adding volume to the dispatch mode. Bag cement remained more pressured, as weaker overall consumption continues to impact retail and residential demand. When comparing Loma's performance with the industry, our bulk dispatches grew below the industry this quarter. It is also important to note that our segment includes measured cement and lime, which behave more similarly to bag cement, while industry statistics disclose volumes exclusively for gray cement. In the same sense, top line was also affected by softer pricing conditions versus third Q 2024, although cement prices in pesos deliver a positive quarter-over-quarter performance when adjusted by inflation. Concrete revenues remain broadly flat versus third quarter 24, as a 37.8% increase in volumes offset softer pricing dynamics in a highly competitive environment. Volume growth was supported by private developments, mainly in logistic infrastructure and residential construction, and also benefit from higher activity in public infrastructure projects across the metropolitan Buenos Aires area and in the province of Santa Fe. Similarly, the aggregate segment also remained flat, posting a slight 0.8% revenue decline. Sales volumes rose 26.3%, driven by higher activity in road construction and railroad projects, partially offsetting the impact of softer pricing. Pricing was also affected by the sales mix, as road construction projects primarily require fine aggregates, which carry a lower unit price and reduce the overall average. Railroad revenues declined 14.9% in the quarter, a 3.9% decrease in transported volumes only partially mitigate the effect of weaker pricing. In addition, the ongoing disruption of the railroad line in Bahía Blanca continues to affect longer haul traffic, mainly grains, gypsum, and frac sand, reducing ton-kilometer transported and consequently revenue generation. Moving on to slide 7, consolidated gross profit declined 32.5%, while gross margin contracted by 524 basis points year-over-year, reaching 17.3%. In the cement segment, cost of sales decreased 8.7% year-over-year, with a 3.5% reduction in unit cost, despite the seasonal impact of higher winter energy cost and higher depreciation associated with the completion of the 25 kilos project. Effective cost management helped offset the weaker pricing environment. Lower maintenance costs and improved thermal energy inputs prices also supported the quarterly cost structure. continue the trend from previous quarter. Thermal energy contracts signed last year, which included year-over-year tariff reduction, together with short-term agreements linked to oil production at tariffs below $1 per billion BTU, help contain variable cost. On the electrical energy side, lower consumption helped offset higher electricity tariffs as the company continued to face the impact of increased transmission and distribution costs. The contraction in cement was accompanied by decline across the remaining business segment. Finally, SG&A expenses decreased 11.7%, mainly due to lower freight and sales tax expenses resulted from reduced sales volumes, as well as a lower impact from salaries and professional consulting fees. As a percentage of sales, SG&A stood at 9.1%, remaining flat year-over-year. Please turn to slide 8. Consolidated adjusted EBITDA for the quarter stood at $36 million, while in pesos it reached 43 billion, reflecting a 23.7% year-over-year decline. This decrease was primarily driven by lower EBITDA generation in the cement segment, followed by weaker results in the concrete and railroad segments. In line with this performance, the consolidated EBITDA margin contracted to 20.8%, representing a 315 basis point decline year-over-year, while remaining broadly in line quarter-over-quarter, despite the typical cost pressure of the third quarter. In the cement segment, the adjusted EBITDA margin contraction was more moderate, reaching 24.2%, down 129 basis points year-over-year, mainly due to a softer pricing environment, which, despite showing an improved sequential trend, still lags on the year-over-year basis. Cost on a per ton basis, excluding depreciations, declined 6.5%, supported by lower thermal energy prices and maintenance cost, which partially offset the weaker top line. The concrete segment saw its adjusted EBITDA margin decline by 1,093 basis points, reaching -6.8% versus 4.2% in the first quarter of 2024, as cost controls and higher volumes were not sufficient to offset softer pricing dynamics in a highly competitive environment. In the aggregate segment, the adjusted EBITDA margin improved by 36 basis points to -16.7%, compared to -17% in the same quarter of last year. Although volumes continued to improve during the quarter, the persistent market challenges and an unfavorable product mix continued to weigh on the segment's profitability. Regarding the railroad segment, the adjusted EBITDA margin contracted to 920 basis points to 3.4% in third quarter 2025, from 12.6% a year ago. Transported volumes improved slightly, mainly driven by higher shipments of granitic aggregates. However, the ongoing disruption of the railway line in Bahía Blanca continued to affect longer haul traffic, primarily grains, gypsum, and frac sand, reducing ton kilometers transported and consequently revenue generation. These impacts were partially offset by cost reductions. Moving to the bottom line on slide 10, net loss attributable to the owner of the company totaled 8.5 billion pesos for the quarter, compared to a net gain of 27.9 billion pesos in the third quarter of last year. This decline was primarily driven by a lower financial result, reflecting a more moderate inflationary effect and a higher impact from FX exposure, combined with weaker operational performance. However, the decrease was partially offset by lower income tax expenses. On the financial front, the main driver of the year-over-year variation was a reduced gain from the net monetary position, as the inflationary effect of monetary liability was significantly lower than in the same period last year. In addition, the exchange rate difference had a higher impact due to the devaluation of the peso during the period. As a result, the company reported a net financial loss of 28.7 billion pesos for the quarter, compared to a gain of 16.6 billion pesos for the same period of 2024. Additionally, net financial expenses increased 7.5%, reaching 17 billion pesos, primarily due to higher interest rates in pesos during the quarter. Moving on to the balance sheet, as you can see on slide 11, we ended the quarter with a net debt of 281 billion pesos and a net debt to EBITDA ratio of 1.49 times, up from 0.89 times at the end of 2024. We're still maintaining a comfortable leverage profile. Cash flow generation from operation activities totaled 32 billion pesos compared to 84 billion pesos in third quarter 2024. This mainly reflected higher working capital requirements and a lower operational results. On the working capital side, the economic uncertainty during the quarter and the higher interest rate environment increased working capital needs. This was coupled with higher income tax payments, since the company did not make advance payment during 2024. On the other hand, inventories decreased during the quarter due to seasonality, as clinker production is minimized during the winter months, while inventory consumption increases. Regarding investment activities, the company allocated 62 billion pesos in the quarter, primarily due to the short-term allocation of the process from the Class 5 bond issuance. On the other hand, CapEx decreased by 14.6 billion pesos following the completion of the 25-kilogram bagging projects. During the quarter, the company generated 74 billion pesos from financial activities, mainly from the bond issued in July. The Class 5 corporate bond amounted to $113 million with a 2-year tenor and an 8% interest rate. The new bond was partially subscribed through exchanges with holders of Class 2 and Class 3 bonds. Proceeds will be primarily used to repay the remaining balance of the Class 2 bonds maturing in December. In US dollar terms, net debt stood at $206 million with a duration close to 1 year. At the end of the quarter, dollar-denominated debt represents 81% of total debt, while the remaining is in pesos. Now for our final remarks, I will hand the call back to Sergio. Thank you.
Thank you, Marcos. Now, to finalize the presentation, I please ask you to turn to slide 13. During the third quarter, the volume recovery trend lost momentum amid uncertainty linking to the electoral process. The recovery experienced a temporary slowdown, but they believe the underlying growth drivers remain intact. Looking forward, the recent electoral outcome and the ratification of the government economic plan could provide the stability needed to unlock investment projects that have been on hold. And although many of the economic and political challenges remain in place, the election result brought renewed optimism, which we expect to see reflecting in higher activity levels. I would also like to highlight that during the quarter we begin dispatching the new 25-kilogram bags. After hard work and meaningful investment effort, the new bag format hit the market successfully and was very well received by both our customer and final customer. I would like to congratulate everyone involved in the project. As we approach the end of the very challenging transition year, we remain optimistic about the outlook for more prosperous Argentina, and Loma continues to focus on optimizing performance and being ready to support the country development and condition normalize. This is the end of our prepared remark. We are now ready to take questions. Operator, please open the call for questions.
Thank you. We will now conduct a question and answer session. If you would like to ask a question, please press star, then 1 on your telephone keypad. A confirmation tone will indicate that your line is in the question queue. You may press star, then 2 if you would like to remove your line. For participants using speaker equipment, it may be necessary to pick up your handset prior to pressing the keys. Once again, star 1 on your telephone keypad. We would also like to ask you to please limit your questions to 1 question and 1 follow-up, please. If you have additional questions, you may re-queue for those questions, and they will be addressed. Also, please note that Mr. Sergio Feifman will be responding in Spanish immediately following an English translation. Please hold momentarily while we assemble our roster. The first question comes from Marcelo Fulo with Ita BBA. Please go ahead.
Hi everyone. Can you hear me?
Yes, we can hear you.
Okay. Thank you, guys. So thanks for taking the questions. My question is related to pricing going forward. So we saw in the third Q actually prices declined by almost $10 per ton when you look into dollars specifically. So, and you guys mentioned that it was part explained by the macro environment and due to uncertainties related to a challenge momentum and so on and so forth, but also due to competition. So I'd like to understand that moving forward, how are guys seeing the pricing approach for the company? How could you see the evolution for prices in dollar terms moving forward? And in my second question, just a follow-up regarding capital allocation. So you guys mentioned these two healthy financial structure and so on and so forth. So I'd like to understand how does the management see the opportunity or the likelihood of these dividend distributions for this year or maybe for 2026. So thank you.
Hi Marcelo, thank you for the question. Con respecto al precio, la dinámica viene similar a lo que veníamos hablando el trimestre anterior.
Regarding prices, the dynamic is similar to the one that we spoke about last quarter.
Tal como habíamos hablado en la última call, estábamos previendo aumentar precios por arriba de la inflación.
As we talked about during the second Q, we spoke about adjusting prices above inflation this second half of the year.
En este quarter hubo una corrección en el tipo de cambio, lo cual obviamente impactó en el precio en dólares.
This quarter we had a correction in the effects that obviously impacted the price in dollar terms.
Siguiendo con esta situación de continuar aumentando el precio arriba de la inflación y ya con un tipo de cambio más estable que estamos viendo los próximos meses, estamos previendo un recupero del precio en dólares para adelante.
But we expect to see the same tendency going forward, increasing prices above inflation, and with a more stable scenario on the effects, probably we will recover prices in dollar terms.
Y con respecto a dividendos,
and regarding dividends,
la verdad es que con la situación macro argentina de los últimos meses, con aumentos de tasas y contexto financiero,
given the macro situation in Argentina with the hike in the interest rates and the political uncertainty,
no hemos avanzado con pago de dividendos estos meses, no estamos previendo hacerlo hasta fin de año.
We didn't advance in paying dividends so far, and we are not expecting to do so in the remaining of the year.
Y ya con este nuevo contexto, macro argentino y financiero, seguramente retomaremos los dividendos el próximo año.
And with this new macro scenario and from what we expect going forward, we will reassume the thinking about paying dividends next year.
Okay, thank you so much, guys.
You're welcome.
The next question is from Andres Cardona with Citigroup. Please go ahead.
Hi guys, good afternoon. I would like to ask about early color for volumes for the 4Q. We saw a nice print for October. I would like to understand what drives that better than expected performance, and if you see those dynamics still in place for November, December. Thank you.
Hi Andres, thank you for the question. Los volúmenes de octubre, como ya ha sido publicado, tuvimos una recuperación en el mercado.
The volumes for October that were recently published showed a recovery in the market.
Nuestra visión es que se encontraron dos elementos. Uno es, obviamente, una posición antes de las elecciones, donde la gente paró algunas inversiones y buscó por ahí resguardo en dólar.
Our vision is that there were two main drivers there. One was that before the elections, many people hold on investing in infrastructure.
En octubre hemos visto también que con un aumento del tipo de cambio, algunos proyectos, debido a la baja en costo en dólares, se han acelerado.
And also with the adjustment in the FX, with a lower cost in dollar terms, some other projects are gaining pace.
Pero viendo los volúmenes de octubre, inicio de noviembre, somos optimistas con el volumen para los próximos meses.
And seeing the volumes of October and November so far, we are optimistic looking ahead.
Claramente, en la medida que la estabilidad en el tipo de cambio, la baja en la tasa de interés y el contexto macro se estabilice, eso va a permitir muchas inversiones comenzar y eso va a traccionar para nuestro mercado.
If we continue this scenario of low rates and stable effects and a more stable macro, that should give more dynamic to investment projects and increase the level of activity.
Y seguramente, como ya hay algunas noticias, esto se sumará a algunas obras públicas que ya están comenzando y que seguramente van a comenzar a salir también.
And as is public in recent news, there are some public works going on that are going to add more volume and increase the level of activity as well.
Thank you, guys.
You're welcome.
This concludes our question and answer session. I would like to turn the conference back over to Diego Jalon for closing remarks.
Hi, thank you very much, everyone, for joining us this morning. It's always a pleasure, and we are here if you have any other concerns or questions regarding the queue, and we'll see you again in the upcoming quarter. Thank you very much.
The conference has now concluded. Thank you for attending today's presentation. You may now disconnect.